And we have also analyzed manufacturing overhead costs. And who can tell me what are the direct costs and direct costs? It's just like as a revision of the previous session. Direct cost and indirect cost. What is a cost object? Any examples? Any ideas? Uh, if you give an example and any student can give an example and just explain using that example what are direct costs, what are indirect costs according in relation or with respect to the object cost object. Any students? Mayank, Ani, Yoma, Amadea, are their names, right? If I'm not, these are your names or nicknames.
Direct costs like
Mhm.
direct material and direct labor.
Yes, exactly. So it can be directly or easily traced to the cost object. Do you remember cost object? Cost object may be any item, may be any activity for which we want to calculate cost. For example, if we want to calculate cost of this pen, so this is a cost object. And uh, in relation to this cost object, direct costs are direct materials, the plastic and all these parts from which this pen is made. And direct labor, those workers who actually did produce this pen. And manufacturing overheads, so these are direct costs and plus manufacturing overheads applied. So manufacturing overheads also should be included in the cost of this pen because all costs should be included actually in the product, and then after selling these pens we need to subtract the cost of this pen and minus all period costs. As you remember, period costs are selling and administrative costs. Do you remember? Period costs which are not which are not included in the cost of this pen. We don't include period costs into the cost of this pen. We just include manufacturing overhead costs into this pen. So manufacturing overhead costs are all costs, all indirect costs. So in relation to this pen, to this product, manufacturing overheads are indirect costs which have been incurred within the factory, such as lighting, heating, utilities expenses, probably some taxes, probably rental payments, and we have some indirect laborers, labor force, and all these indirect workers have to be paid. And the salary and wages of these workers will be included into the manufacturing overheads. And also, there are some indirect materials which may be used in this pen, in this product. So all these indirect materials are also a part of manufacturing overhead costs. So manufacturing overhead should be included to the product cost. And just remind me, uh, which costs make up, or which costs usually make up the product cost? Again, Fabrianti, which cost? So if we write down product cost, then which cost should be included into the product cost? Fabriante?
Um,
Direct material,
yes, and direct labor,
labor, and
manufacturing
manufacturing
overhead.
overhead. These are product costs. So we have product cost. And as you remember, production costs which occur within the factory. Period costs, these are selling and administrative costs, and we don't include them into the product cost. We simply what? We simply expense them directly to income statement. So what do we mean by expensing directly to income statement? It means we simply subtract from gross profit selling and administrative expenses. As you remember, we have looked before at the income statement, traditional income statement, which is actually prepared for financial analysis, financial accounting purposes. Usually, traditional format of income statement is prepared for external users. Contribution format of income statement is usually used by managers for internal use. Okay, now let's look at resource and output measures. Actually, we during the last session, we examined activity. So, what is an activity? What activity and activity drivers? And just as a recap of the previous material, so what we know that every activity needs resources to accomplish. So every activity, to accomplish every activity needs resources to accomplish the task it has to do. So resources might include what resources are used to make a product, for example, to um, to make the product. This might be materials, energy, fuel, labor, and capital. So these are inputs combined to produce an output. Output, it's simply finished goods that we produce. Another name for finished goods is output. And inputs, these are all resources which are used to make a product. So what kind of resources? Material, energy, labor, and capital. And for example, if the activity is moving materials, the inputs could include crates or materials, fuel, forklift operator, which is labor force, and the forklift, capital. The output would be moved materials. So what is the output? Materials, right? Moved materials. So we have inputs in the production process. We have inputs going into the production process, and we have what? Finished goods as an output of the production process. And how do we measure this output? One measure is a number of times the activity is performed. For example, suppose that the activity is moving materials from the storeroom to the assembly line. A good measure of output is a number of moves. The more moves that are made, the higher the cost of moving. Therefore, we could say that the number of moves is a good output measure for the activity of moving materials. So as we said, activity, do you remember activity drivers? So activity of moving materials, also it incurs cost because we need some workers who will be moving these materials from from the storeroom to the factory assembly line. And how to measure that activity? Simply calculating the number uh, of the movements, the number of moves. For example, 10 moves has been done to production department A. 5 moves, so moving materials from the storeroom to the production department B. How many moves has been done? Or have been done, for example, 5 moves have been done to production department B. To production department C, 15 moves have been done. So this movement of materials also incurs cost because we have to pay to workers who move these materials. And how to allocate this cost of the workers, cost of the wages of these workers, how to allocate to production departments, because each production department takes or requires several number of moves. So how to allocate? We need an allocation base. So activity which creates this cost, activity which creates moving cost is the number of movements. So got the point. Within the factory, how many movements have been done? For example, 20 movements within 1 month have been done. And these 20 movements were paid for workers. So these movements incurs costs. We have to pay to workers. And then we have to allocate this cost that we paid to workers, the salary. This is the cost. This is cost. So we have to allocate between several production departments. Okay, and another term for output measure is driver. So driver is any observable causal factor that measures the amount of resources a cost object uses. And activity drivers explain change in activity costs by measuring change in activity use or output. So for example, the driver for material handling may be number of moves. So we said material handling department. So these workers who take material from the storeroom and bring the material to production department. So these workers incur costs, they have to be paid, and these are handling, material handling costs. And actually, what causes this material handling cost? Number of moves. How many times workers moved from the storeroom to the production department? So these are moves. How many times each production department, how many moves each production department took actually? So the driver for shipping goods may be the units sold, and the driver for laundering, hospital bedding, may be pounds of laundry. So in other words, for example, there is an ordering cost. We have ordering costs. So what are the ordering costs? There is an ordering department, and it has employees who deal with the orders. So what they do, they usually call to customers, ask them how many orders they should, for example, they want to order, and customers come to the ordering department, and ordering department takes documents, process these documents, fill in orders, so how many goods, how many items at what price the customers wants to buy. So these are all costs. Employees who work at the ordering department, they have wages, they have salaries, and these salaries actually represent ordering costs. And maybe not only the salary, there might be some other ordering costs. So costs related to the ordering process. So we will collect all ordering costs and divide by what? A cost driver. So what is a cost driver for ordering costs? What do you think? Cost driver, any factor, a factor which causes costs, which incurs, makes the cost to emerge, to exist. What do you think for ordering department? So what is an activity driver? Nabila, Alfan? Okay. Sania, Ani. So what do you think for ordering costs? For the ordering cost, what will be the cost driver? Cost driver, any factor which creates cost. For ordering cost, for example, the cost driver will be a number of orders. So the higher the number of orders, the higher ordering costs are. So this is the cost, how we call activity driver or the cost driver. And the driver for laundering hospital bedding, maybe pounds of laundry. Laundering hospital bedding. So when we want to wash bedding, so what we'll take all the bedding and go to the laundry to wash it, right? And this also incurs laundering costs. And what is the driver for that laundering cost? Simply pounds of laundry or kilos of bedding. Kilos of bedding. That the higher the kilos of bedding we want to wash, the higher the laundering hospital costs are. So got the point. What is a cost driver? So yeah, activity drivers actually are divided into two general categories: production or unit level drivers and non-unit level drivers. Production drivers explain change in cost as units produced change. So if the number of units produced change, in cost. Production drivers explain change in cost. So pounds of direct materials, kilowatt hours used to run production machinery, direct labor hours are examples of production drivers. So this production drivers explains change in cost as units produced change. In other words, as pounds of materials used, kilowatt hours and direct labor hours increase, so the higher the costs are, the higher the costs are. Okay, let's look at non-unit level drivers. Non-unit level drivers explains change in cost as factors other than unit change. For example, setups are a non-unit level activity. So every time when the factory wants to produce on the machine any product, it has to set up that machine, that equipment. And this also creates costs, setup costs. For example, if the factory accepted several orders, one order is to produce from customers. So one order from customer is to produce t-shirts. Another order from another customer is to produce trousers, for example. And in order to produce each product, each type of product, every time equipment, a sewing machine, has to be set up. So what setup workers, for example, the workers who set up machines, they approach to the machine and set up, fix that machine. Probably setting up takes the change of some parts. That worker probably need to change some parts in the sewing machine, set up it, fix it, and make it ready to produce t-shirts. When one batch of t-shirts has been produced, then again a worker comes and set up the machine, change some parts, probably oil that machine, and make it ready to produce trousers now. So did you get the point? So setup costs, these are costs to set up machine equipment to make it ready to produce one bunch of a product. For example, 100 or 1,000 t-shirts to produce, we need to set up machine. And then again, 1,000 of trousers to produce, we again need to set up machine. And this setting up incurs costs, and we call them, and it is called setup costs. And why it is non-unit level drivers? Because no matter how many units are in the new batch produced, the cost to set up remains the same. So setting up cost remains the same, and we can what? Regardless of how of the quantity of units produced in the new batch. So new batch, this is, for example, in one batch is the production of t-shirts. A second batch is production of trousers. So regardless of how many shirts and trousers will be produced, the setup cost remains the same. So setup cost for a new batch. Students, are you getting me actually? Do you understand what I'm explaining, I'm telling? Okay, now let's look at mixed costs. As you probably remember from previous chapters, from previous session, a mixed cost, it is the word mix, so it is a mix of two types of cost. A mixed cost contains both variable and fixed elements. And look at the example of utility cost. So what we have on the x-axis, we have activity level, usually. If it's utility cost, let's say kilowatt hours is activity level. On y-axis, we have total utility cost. And as you remember, usually, for example, for electricity, costs may be mixed costs. So there is always exists a fixed monthly utility charge and always exists variable cost per kilowatt. Do you remember during the last session I gave you an example with mobile phone? So what we have to pay for mobile phone? We have to pay if you buy, for example, a plan for your phone, for example, a plan which gives a certain amount of SMS, certain amount of minutes to talk, and gives, for example, internet package. So you probably have to pay fixed monthly utility charge. Let's say $10. This is for plan, right? And if you, for example, use more minutes than in the plan, so then these extra minutes will be charged at a different rate. So variable, and this part, extra minutes, and will incur extra costs. And this part will be variable part, which depends on the number of extra minutes you are using. So simply remember that mixed cost has fixed element and variable element. And if you calculate what is the total cost, variable part plus fixed part, you will get a number, a value for the total utility cost. So analysis of mixed cost. Account analysis and the engineering approach. In account analysis, each account is classified as either variable or fixed, based on an analyst's knowledge of how the accounts behave. The engineering approach classifies costs based upon an industrial engineer's evaluation of production methods and material, labor, and overhead requirements. Okay, so let's analyze mixed cost using a scatter graph plot and the high-low method. Let's look now diagnosing cost behavior with a scatter graph plot. We have an example here and assume the following hours of maintenance work and the total maintenance cost for 6 months. So we have here 6 months, we have hours of maintenance and total maintenance cost. Okay, hours of maintenance, and let's put all this data, let's plot this data on the graph. So what we have here, we have hours of maintenance on x-axis, and we have total maintenance cost on y-axis. So if we plot this data, for example, in January, hours of maintenance is 625 hours, and total maintenance cost 7,950. Okay, let's plot this. 625 and 7,050 something. So this is this point. You see, we can plot this point. This point. For example, in January, hours of maintenance 450, we will plot this. X is, the value for X is 450, the value for Y 7,400. Okay, let's plot this 450 So it's around here, 450 and 7,400. 7,400 total cost. So it is this point. Can you see this point? I have plotted this data, and this actually point has coordinates of x and y. For x, it is 450. For y value, it is 7,400. So I'm plotting this, and I found this point. So by doing this for each month, for example, for March, what are the coordinates of the point? On the x, we have 700 hours, and on y axis, we have 8,275. So let's look. 700 hours for x and 800, how much was that? 800 to 8,275. So this 8,700 and 8,275. So it is this point. For April, on x-axis, we will find 550. On y-axis, we will find the value 7,625. So let's plot this. 550, so it's this point, right? 550, and what was that? 7,625. So 7,625. So this point. By doing this, we have 6 months, and we have plotted 6 points. You see here 6 points on our graph. So as you see, actually, this is a scatter graph plot. Scatter graph. So we have only points, we have dots here. It is a scatter graph plot. Scatter graph method, actually. And once we have plotted this, on the graph, so we can what? We can assume that this actually there is a linear relationship between hours of maintenance and total maintenance cost. So what does it mean, a linear relationship? It simply means when the hours of maintenance increases, total maintenance costs also increase. So got the point? Linear relationship. When hours of maintenance increases, you see on this X, total maintenance costs also increase. So we assume a linear relationship between hours of maintenance and total maintenance cost. And this linear relationship can be expressed. Do you remember we actually saw this formula? Y equals A plus BX. So what is Y? Y represents total mixed cost. What is A? A simply the total fixed cost, the vertical intercept of the line. Let's look at the vertical intercept of the line. This is vertical intercept of the line. This is A. the value, the amount of fixed cost. This is A in our equation, and B, the variable cost per unit of activity. So the slope of the line. What is, let's look at this. B, actually, this is the slope of this line. So what is the slope actually? When we divide rise over run. Okay, this is the slope of the line. You see the slope, how tangents, tangents of this corner, the slope of the line. It represented by B, and actually it is variable cost per unit. So how to find out the slope? If difference in y, okay, let's simply say that this cost, the amount of this cost, variable cost, we divide by the activity level. When we do this, we find B, which is the slope of the line and which is a variable cost per unit. And X simply the level of activity. So if we know the amount of fixed cost, if we know B is variable cost per unit. X is simply level of activity, the number of units, X. So X may be any amount. For example, 100 units, 200 units, 500 units. So this linear relationship and this equation allows us to calculate total cost and even allows us to predict total cost for a certain number of units. For example, if we want to calculate, so what is the total cost for 850 units? When we know A, we know B, and then we simply B multiplied by 850 and add up these two types of cost, and we will get total mixed cost. Okay, and there is an example how to use this equation. For example, if your fixed monthly utility charge is $40, your variable cost is $0.03 per kilowatt hour, and your monthly activity level is 2000 kilowatt hours. What is the amount of your utility bill? So for A, this is fixed cost. A is the fixed cost. In our example, fixed monthly charge is $40. Plus, you have to pay a variable part, variable cost per kilowatt. So variable cost per kilowatt, we multiply by the number of kilowatt hours used, and we will receive total cost equals to 100. Using this equation, total cost for any activity level, for we may calculate for 3000 kilowatt, we may calculate for 5000 kilowatt hours, simply by what? Instead of replacing this amount, by multiplying here by 3,000 or 5,000. So got the point? Any questions? Saniya, Salma,
Get it, miss?
any questions? Okay, now how to use high-low method. When we know, when we have some available data and we need to calculate, for example, variable cost, and we need to find out the amount of fixed costs. In this case, we can use high-low method. So what is a high-low method? Look at this data in the table given. We have months, January, February, March, April. So during these months, April, May, June, we have hours of maintenance used. January 625 hours have been used, in February 450, March 700, April 550, and etc. In June 850. And we have corresponding costs. For January, the total maintenance cost was 7,950. For February 7,400, and etc. Up to June. For June, it's 9,800 total maintenance cost. So, how to use high-low method? First of all, let's identify, let's define which is a high activity level and which one is low activity level. So don't look at the cost. Don't look at the activity level, which are hours of maintenance. So in January, February, March, so which is the highest activity hours used? In which months?
In June, miss.
In June, right. So that's why we'll define this how high activity level, 850 hours. So which one is the lowest activity level, lowest hours of maintenance?
In
In which
In
February.
February.
In
February.
February, yes. So what we do? Low activity level, 450. So what is the difference or change? 850, it equals 400, right? Okay, now let's look at the corresponding costs, maintenance costs. So for high activity level 850, what was the cost? 9,800. For the low activity level, 450 hours, let's look what was the cost? 7,400, right? And let's find the difference, a change. How to find? We simply subtract 740, we subtract from 7,400, we subtract from 9,800. And so what is the change? 2,400. And if we simply divide change in cost, divide by the change in activity level. So we divide 2,400 by 400 hours. And we receive the value. So what is this value? So what is the name of this value? It is variable cost per hour of maintenance. So variable cost, you see that using high-low method, how to calculate variable cost per unit. Because the fixed cost remains the fixed, so which cost will change with the number of units? So number of units increasing, right? So which cost will be changing? Only variable cost will be changing. And this is a difference, 2,400, the variable cost. And if we divide by the number, a change, so the change number, so difference between how high and low, we calculate variable cost per unit. Okay, we know variable cost per unit. So what is next? You should remember again this equation. So total cost equals A fixed cost plus variable cost per hour multiplied by number of hours. Okay, so let's write down here. Total cost, so what total cost? Equals to fixed cost plus total variable. How to find out total fixed? Simply total cost minus total variable cost. Total fixed cost using our example. Let's take high level, high activity level. What was the total cost for high activity level for 850 hours? It was 9,800. It is the total cost minus total variable cost. Okay, let's calculate total variable cost. We just calculated that variable cost per unit equals to 6. It is 6 variable cost per unit. We multiply by number of hours, 850. And how to calculate again total fixed cost equals 9,800 minus variable cost, 5,100. So total fixed cost equals to 4,700. And we know that fixed cost remain fixed. For this activity level, fixed costs remain fixed. Right? So we can, knowing total fixed cost, now we know total fixed cost, we can simply express the cost equation for maintenance. Now we know that fixed cost is 4,700 multiplied x. X, this is simply number of hours. So this is the equation. Total cost equals to the sum of fixed and variable cost. Knowing this equation, actually, we can calculate total maintenance cost for any hours. For any, for example, we can calculate total fixed cost for 600 hours. We don't have here total 600 hours, but if we know this equation, so we can simply what? Replace, calculate for 600 hours. Instead of x, I simply write down 600 hours. And I simply very easily can calculate its total cost for 600 hours. So you know that X may be any value, any number. Any questions related to this? Let's do this concept check 1. Salaries, sailors' salaries and commissions are $10,000 when 80,000 units are sold, and 14,000 when 120 units are sold. Using the high-low method, what is a variable portion of sailors' salaries and commissions? Okay, let's calculate this. Muhammad, Salma, Alfian, Ani, Farah, Anisan. Let's calculate using high-low method. Who can tell, Salma? Which is a low level of activity? Which one? Salma? Who can tell? Simply is a low level of activity. You are given 2 levels of activity and costs.
80 80,000.
Units. This is a low level, right? Which one is, what is the level? Activity level. Activity level, not in dollars, in units.
It is same as
120,000.
Yeah, so low is 80,000 units. Okay, let's look at high. $120. So, okay, it would be better if we could change it to replace high 120 and low 80,000. And now, what is a corresponding cost at the high level cost? High, let's say, level cost equals to what?
14,000.
Yes, 14,000. 14,000. Okay, let's add here. What is the difference or change? Change here. 40,000. Yes, good. 40,000. Okay, now high level cost and now low level cost. What is low level cost?
$10,000.
10,000, yes, 10,000. And now what does it change here? 4,000, right? 4,000. So how to calculate variable cost? What should we do to calculate variable cost? So let's calculate variable cost per unit. Variable cost per unit equals to what? Change in cost divided by change in quantity.
Unit.
So 4,000, actually, yeah, I must 4,000 divide by 40,000, right? So it is 0 0.1, yeah.
1.
0.1, this is, what is the variable cost? $0.1 variable cost per unit, right? So let's say 0.10. So which answer is correct? If we have A, B, C, and this E, yes, it's just, which one is correct?
B.
B is correct, yes. So, if we put it here. So is correct. Good. So this is a calculation, how to calculate it. Change in cost divided by change in units in activity level. Now, concept check 2. Now calculate fixed portion. So we have the same example. Now you need to calculate fixed portion of sales salaries and commissions. How to calculate? Do you remember? We have total cost equal to fixed cost, total fixed cost. So let's write down total fixed cost plus total variable cost. Having our example, let's take high level. So for the high level, total cost, what is the total cost for high level?
14,000
total cost, right? So total cost we know. The total cost is, which is total cost 14. We don't know total fixed cost, but we may calculate now total variable cost. So what was the variable cost per unit? Do you remember from previous?
0.1.
Yeah,
$0.1.
0.1. Yes, okay, so 0. Oh, sorry, 0.1 or 10, we must multiply high level in units. So this is variable cost per unit, right? What was the high level in units?
120,000.
Yes, 120,000. So we simply multiply by 120,000. Okay, so I just remove this high level, so you actually understood. Okay, and how can I find total fixed cost? So total fixed cost equal to 14,000 minus 120,000 multiplied by 0.1. It's 12,000, right?
Right.
Easy calculate total fixed cost. Total fixed cost equal to 2,000. Mhm. So knowing the equation, so this is an equation for total cost, and substituting variables into this equation. So we can let's we can actually we took the data for high level. Let's just do the same for the low level, and we will see if the fixed costs are the same. So let's take the low level. 10,000 was total cost for low level. And total fixed cost we don't know, plus 0.10, we multiply by the activity, low activity, it was 80,000, right? So now calculate please. So what is the total cost if we if we write the values of low activity? Again, total fixed cost equal to 10,000
2,000.
minus
8,000.
8,000.
8,000. So you see the fixed cost is the same, fixed 2,000. For high level it is 2,000. For low level it is also 2,000. So how can you find out fixed cost? You may use high level or low level. So the answer will be the same for fixed, total fixed cost. You will still get the same result. So got the point? How to calculate? Mhm.
Yes.
So this is using high-low method. Okay, so you see this is the answer is given. So the correct answer is A, 2,000. And we have here the same calculations. Okay, now analyze a mixed cost using a scatter graph plot and the least squares regression method. We will look at least squares regression method. A method used, what is a regression method? This method used to analyze mixed cost if a scatter graph plot reveals an approximately linear relationship between the x and y variable. So usually x is independent variable, y is dependent variable. So what does it mean? Dependent. If x increases, then y also increases. So it means that y depends on the x. How x behaves itself, then the y also will be increasing. So if x decreases, y also decreases. If x increases, y also increases. So in this case, we say x is independent variable, y dependent variable. And this regression method uses all of the data points cost components of a mixed cost And the goal of this method is to fit a straight line to the data that minimizes the sum of the squared errors. Let's look at this. So as you see from previous scatter graph, do you remember I've shown you? I just go back again to that slide. So this is a scatter graph. In order to apply regression analysis, least squared regression analysis, you need to to make a scatter graph plot, to plot the points on the graph and see if there is approximately linear relationship. Approximately linear relationship. So you see, what does it mean? A linear relationship. When x increases, y, which is cost, also increases. You see, x increases, the cost, which is y, also increases. So this is a linear relationship. Approximately, we can see from this scatter graph that relationship is linear. And let me see if I have some other graphs. Okay. Yes. Then later on, I will show how the scatter graph looks like when there is no linear relationship. So we know that there is a linear relationship, right? Then we may apply regression analysis, least square regression analysis. So what is, you see different points here on, we have point y1, y2, 3, 4, and etc. So different points, and the line which minimizes the sum of the errors. So what are the errors? So this is a regression line. The regression line which goes through these 3 points, and it actually shows what? That there is a linear relationship. So if I plot simply, if I make a line here on this graph, so if I make a line here also, like that one, if I make a straight line here, so that will be a regression line. And you see some points don't lie on the line, regression line. And these points, now go back to this slide again. Some points don't lie on the regression line. Regression line actually shows this linear relationship. And the deviations of these plotted points is called regression error. So this from point Y, from blue point to red point, so this is a regression error. And also this deviation of this blue point from the line, regression line, so this is regression line. So this deviation is called regression error. You see that these are all regression errors. These vertical deviations are regression errors. And this regression, least squared regression method computes the regression line. This is a regression line that minimizes the sum of these errors. Okay? So actually, least squares regression analysis also uses this equation. The total cost equals to fixed cost A, which is A, plus total variable cost. Total variable cost, which is B, variable cost per unit multiplied by X, number of units. And how to calculate B using this in least squares regression method. And the formula is given for you, how to calculate B, and how to calculate A, fixed cost. When we know A and B values, we simply replace in our equation A and B, and we can calculate again total cost for any level of activity, for any number of units. Okay, as we said, regression line has a form, this fitted to the data where A intercept represents fixed cost, B the slope, as I said, a slope of line of variable, the slope of line is variable cost per unit. Again, let's look at this graph. This slope of this line is variable cost per unit, which is B. And we simply multiply by X, the number of units. Okay, and let's use an example. I have an example. Okay, we will compare two methods from, you can compare. For example, you can use high-low method and calculate values for B and A, and you can use least squared regression method, also calculate values for B and A and simply compare. I can say that least squared regression method is just more precise than high-low method. Okay, and regression analysis assumes a linear relationship, as I said. However, that does not mean the degree of correlation between the variables, as it is unlikely that the true relationship is a straight line. We assume that there is a linear relationship, but sometimes it may be unlikely that relationship is a straight line. So to do this, we need to calculate correlation coefficient. How these variables, two variables, are related to each other. Correlation coefficient shows this. To what degree, or what is the percentage of these two variables, the interrelation of these two variables. So let's look at if correlation coefficient R varies between +1 and +1 and -1, And if it's +1, means the perfect linear correlation. 0 means no correlation, and -1 means perfect negative linear correlation. So how calculate coefficient, correlation coefficient? There is mathematicians have already done this job, and we just need to use formulas for coefficient correlation, correlation coefficient, which is R, and it has this formula. And when we know coefficient correlation coefficient, then we simply can find out the determination, coefficient of determination, or determination coefficient. Simply, coefficient of determination is represented by R squared, the square of R, the square of this one, correlation coefficient. If we square this value, we will get coefficient of determination. Let's now look at the example, regression example. Okay, so we have a number of units and costs associated with this number of units. In order to use regression method, we need to apply the formula. What is the formula? We need to, in order to calculate again total cost using this least square regression analysis, we need to calculate B and A. But to calculate B and A, we need to know which is the sum of this X multiplied by Y. Sum of X multiplied by sum of Y. Also, N multiplied by sum of X squared minus sum of X also squared. So you see how many variables do we need actually. Okay, let's use this example. So units, number of units, we designate them as X. So this is X number of units. Costs associated with this unit, we designate as Y. So you see Y is independent variable, while X is Y is dependent variable, X is independent variable. So, which means X can be produced any number. X does not depend. It is, we can produce 400, 600 units, but cost depends on the number of units produced. The higher the number of units produced, you see, the higher the costs are. So you see that that's why X independent, but cost, which is Y, dependent. We call it dependent variable. To calculate, to use regression analysis, what we need also? To find out X multiplied by Y. So let's calculate. I have already done this. X multiplied by 1. So X, 400 units, we multiplied by 1. By Y, which is 1050. If I multiply 400 by 1050, the result is 420,000. Students, are you getting me? Are you following me?
Yes, get it.
Okay, let's find out now. X squared. So this is squared. How to calculate X squared? X 400 multiplied by 400. So X squared is 160. Y squared. So Y, we take Y, which is 1050, I multiply by 1050. So what is the result of this? 1,102,500. So this is a way how to calculate for each month. So got the point how to calculate. February 600, X 600 units cost 1,700. If we multiply X by Y, the result will be 1,020,000. If we have squared, X squared, so 600 multiplied by 600, again will be 600, we multiply by 600, so this is X squared. We have again what? Result 360. And Y squared, so this is simply 1,700 squared, and this is the result. So for each month we have calculated. Okay, so got the point how to calculate.
Yes, Miss.
Yes, Miss.
Okay, and then the final line, you see the final line in this table. The sum, which is the sum equals to the sum of all x's. So how to calculate 4,000? 400 plus 600 plus 550 plus 800 plus 750 plus 900 equals to 4,000. How to calculate in this column? So all variables in this column we add up. We add up all variables in this column, and the total sum equals to 10,750. The same we do with this column. The total sum of all these variables in this column equals 570,000, and etc. For x squared, for y squared, we also have done the same. We have computed the total sum of these results in this column. Now we have all data to calculate B and A. Okay, so what we have? To calculate B, we need just to replace, to put the values. Okay, so what is N? First of all, N multiplied by sum of x, y. First of all, what is N? Okay, I haven't written down here for you. I just want to see. Yeah. So in our example, N is number of months: January, February, March, April, May, June. How many months here? 6 months.
6.
So N is number of period. We have 6 for N, right? So N 6. 6 we multiply. What was the sum of XY? Let's go back to our table. Sum of XY. Total sum of XY is 7,570,000. Okay, let's put this value in this equation. 7,570,000 minus total sum of all x's. Okay, what is the sum of all x? This is 4,000. Okay, we write down 4,000 multiplied by total sum of y. We have here total sum of y. 10,750.
Nggak ada. Telat.
Nadik mic.
Okay, so you see that total y, sum of all y's equals to 10,750. We see this value to calculate, and what we have in the nominator, we have put all the values in nominator. Now let's look at denominator. And again, 6 months, 6 period. We should multiply by sum of x squared. What is the total sum of x squared? Let's look at this column. X squared and total sum is 2,835,000. Okay, we'll put this instead of this value. We'll put 2,835,000 minus x sum of x squared. So total sum of x is 4,000, and I've put this sign. It means squared. Okay, I have calculated all this using my calculator, and what is the result? The result is B is variable cost per unit. Do you remember? B, variable cost per unit. So what is a variable cost per unit? It is $2. Only $2.3960. Okay, once I know variable cost per unit, and I have the formula for fixed cost. A is fixed cost. Okay, let's write down here. B it is variable cost per unit. A, it is total fixed cost. So how to calculate total fixed cost? Again, I replace the sum of y. What is the sum of y here? 10,750 minus variable cost B. I know B, variable cost per unit multiplied by total sum of x. Again, total sum of x is 4,000 and divided by 6, number of periods. So what is the total cost? $194.
Telat kan? Emailnya belum. Iya, akunya belum.
Okay, so as you see, using this regression analysis and using this formula has been calculated by mathematicians. We don't need to calculate it ourselves. B has been and A has been done. We just need to replace. What we need to do for regression analysis, we need to make up this table. For regression analysis, usually Excel is used, or you can make up any table in Excel, for example. And actually, there is a special program which may calculate regression for regression analysis. So you just need to fill in data, and it will automatically calculate for you B and A values. Okay, so why do we need this? Regression analysis also used to calculate total cost. The value for total cost. Why it is total cost actually? What is Y? It is total cost. If we know this, it is very similar. The high-low method and analysis will give you approximately the same values for B, But regression analysis is, as I said, is more precise than high-low method. So knowing A and B values, I can predict total cost for any level of activity. Let's calculate what is the total cost for 850 units. So look at this table. Do we have 850 units here?
No.
We don't have, but we know the formula and we know A and B values. So how much is A, how much is B? We don't know, we don't have 850, but we can calculate this. We can forecast, we can predict what is the total cost for 850 units. So total cost for 850 units. Let's replace, just put the data in the formula. We have fixed cost, $194.33 plus variable cost, which is B, variable cost per unit, $2, 2.39, these are dollars, so 39 cents, let's say $2.39, and we multiply 400, we multiply by 850 units because we need to know for 850 units total cost. So we multiply and add up these two values, and we can forecast that 480 units total cost equals to $2,230.93. So you see that it is very useful to use regression analysis or high-low method. But just keep in mind that total cost may change. Total cost may change, and especially pay attention to fixed cost. Fixed cost, this is A. Usually fixed costs remain fixed within a relevant range. Do you remember what a relevant range is? Do you remember? Do you remember stepped cost? Step cost, as I shown you. So it simply means, for example, if we produce 1,000 units and from 1,000 till 5,000 units, fixed cost will be the same. And this relevant range, let's say, okay, so I just need to add maybe one more slide. So for example, fixed cost remain fixed if we produce 1,000 units. From, let's say, 1,000, we will produce up to 5,000 units. So when we produce 1,000 units, fixed cost will be the same. Let's say it is $1,000. When we produce 1,000 units, fixed cost $1,000. When we produce 2,000 units, fixed cost still 1,000. When we produce 3,000 units, fixed costs are still 1,000. And it is up to 5 units. When we produce 5,000 units, fixed costs are still 1,000. So this is a relevant range. These units within which the fixed costs remain fixed, these units, they are called relevant range. So relevant range. So got the point. Within this relevant range, within this production from 1,000 till 5,000 units, fixed costs remain fixed. So got the point? Remember that within a relevant range, fixed costs remain fixed. If we produce, for example, 6,000 units, then fixed cost will not be $1,000. So got the point?
Got it.
Even not 600, even to make it more precise, from 5,001 units, fixed cost will not equal to 1,000. So got the point? A relevant range is from 1,000 till 5,000 units. This is the relevant range within which fixed costs remain fixed. If it exceeds the number of relevant range, if it goes beyond the relevant range, 1,001 units, then fixed cost may change. Okay, so got the point. So we are calculating it within the relevant range, fixed cost remain fixed. It means A, total fixed cost will be fixed. So within these numbers produced, fixed cost will be fixed. Let's say from 400 till 900 units, fixed cost remain fixed. But if it exceeds 900 units, then fixed cost may change. So be careful when applying this high-low method or regression method. Fixed cost will be fixed only within the relevant range. Okay, now let's look at exercises. I will try to find Okay, students, can you see this page? Exercise 6A+1, high-low method.
Yes, we can
Can you see
see.
on the screen? So please read this exercise. And there is a table with data given. And the requirement, using the high-low method, estimate the fixed cost of electricity per month and the variable cost of electricity per occupancy day. Round off the fixed cost to the nearest whole dollar and the variable cost to the nearest whole cent. Okay, so you need to calculate using high-low method B and A, variable cost per unit, and then fixed cost. Okay, so we have the chain hotel in Big Sky, Montana has accumulated records of the total electrical cost of the hotel and the number of occupancy days over the last year. An occupancy day represents a room rented for 1 day. The hotel's business is highly seasonal, with peaks occurring during the ski season and in the summer. Okay, so we have months, number of months, we have occupancy days, the number of days, and electrical costs associated with this number of days, right? So can you, having this data, you are required to calculate variable cost and fixed cost. So I will ask you to do it on your own. I'll give you 5 minutes. Can you quickly calculate using high-low method? So how to calculate high-low method? Change in cost, we divide by the change in activity level, right? Change in cost, we divide by the change in occupancy days, in our case. First of all, define which is in which months there was a low level and in which month there was a high level of occupancy rate.
The low level is in the October, Miss.
Yes, in October low level, right?
Yes.
And high level?
The high level is in August.
In August.
August, right? Is it the highest? Yes. So first of all, calculate change in, so this is the change in days, and look at the corresponding costs. So what is a high level cost? High level cost.
500,
Uh-huh.
5,148.
Yes. And what is a low level cost? Low level cost, it is
188.
1,588.
yes, please find the difference or the change in cost first. The change in cost. What is the change in cost? What is the difference?
Is it 4,560?
Salma, you need to subtract. high level cost minus low level cost. 5,148 subtract October, low level, right, cost, low level activity. And what is the cost for that low level? 1,588. So you need to subtract this from 5,148. So what is the value? If you subtract, what is the change in cost?
In cost, I get 3,560.
Yes, 3,500, 3,560,000, right? Oh, so no. Yes, it is 3,000. Yes, 3,560. Yes. And now let's calculate change in activity level. So what we need to do? What is the highest activity? In August, it is 2,406 minus the lowest
In
level.
May,
In May or
October.
October? October, right? What is the highest level activity, occupancy days? It is in August minus in October 124. So how much it's going to be? 2,406 minus 124. It equals 2,282. 82. Yes, good. And now change in cost divided by the change in activity level. So what is the result?
Unit change, miss.
Yeah, so change in cost divided by the change in activity level.
Is it 1.60? Is it 1.60?
Yes, it is 1.56. Yeah, so because you rounded, right? It is round of the fixed cost to the whole dollar and the variable to the near whole cent. Yes, it is 1.56 cents. Dollars, $1.56. So does everybody know how to calculate change in cost with you have this equation? Do you remember? You have a formula. So total cost equals to what? Equals to total fixed cost plus total variable cost. So let's take high level. So what is the total cost for high level? So what is the total cost for high level? It is, write down please, 5,140 to total fixed cost plus, what was the variable cost per unit?
1.56.
Please. Plus open and in brackets, write down please, 1.56 multiplied, what is the highest activity level? 406. And tell me now, so what is the value for total variable cost? Who has calculated? Salma, have you done it? What is the total variable cost? Okay, let's calculate using this. So we have high level, which is 2,406 maintenance hours, if I'm not mistaken, and cost equal to 5,148. And we know that variable cost per unit, we have already done it, equal to $1.56. So let's now replace. We know that total cost multiplied by what is the activity level? It is 2,406 hours, right? So if I calculate this, so it should be 1,000, so the total fixed cost, it is equals to 1,394.64. So if we round it to the nearest dollar, 95 dollars. So this is easiest way, very easy to calculate total fixed cost when you know the total cost and variable cost and the activity level. So got the point? Okay, let's now exercise 6.2 least squared regression method. So you are given data. And requirements. So what I will do right now, I will